Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. This is part 3 of the oil energy crisis that's coming ahead of us. I'm going to touch on a little bit on market conditions, not too much. You guys should already know this. It's in the thesis of 1.0, 2.0 in the link below in the description field. Watch those videos. That is the market conditions. The market conditions is what gives us the tailwind behind our investments. It is what increasing interest rates, higher inflation, and an expansionary phase of real estate. I'm going to do a quick touch on it, a touch and go, and I'm going to look at charts, ratios, and show you guys what's coming. The setup. The setup is insane for our potential investment opportunities here. What I'm looking at is a wide array. I'm looking outward at everything that's a potential investment that's going to work under these next market conditions. If we have higher energy prices, usually that's conducive to higher inflation. Higher inflation is conducive to investments in the commodity sector. So this money's coming. They're printing money on top of this. We have an expansionary phase of real estate that's also ahead of us. That expansionary phase is inflationary. More credit coming into the system. People are going to have to get paid more money, and we're going to get a little squeezy on the energy side. What does that mean? It means that we should position ourselves for higher energy costs and higher input costs for a lot of these companies. So I'm gonna run through here real quick and give you guys some market conditions. I'm not going to spend much time on the front here, but I just wanted to touch on this. We are in an expansionary phase right here, going above the average. I'll show you in the next clip. This is an inflationary cycle. This is the new housing starts, the average. Whenever you go the average, you go into an expansionary phase. We're throwing a buy point for commodities to be buying, and this is the expansionary phase. These are all expansionary phases. This is a buy points for commodities. This is an inflationary period, and under inflationary periods, commodities outperform. This is the commodity to S&P 500 ratio. This is commodity to stock ratio. Whenever it's low, you buy commodities. Whenever it's high, you sell commodities and buy stocks. You want to be buying commodities right now. We've never been this out of whack with this ratio ever. So commodities are throwing a buy signal. These circles here are these circles at the beginning here. So everything is good for commodities to be a buy. Market conditions are aligned. Technical analysis. We've got the CRB index behind me. We have this is a descending wedge pattern. It's a descending wedge pattern. You always have this 1, 2, 3, and then we break to the upside. We've broken to the upside. Oops, broken to the upside. We are moving on up. We have broken the pattern. It is good to go. So CRB index looks good. We've got confirmation there that the capitulation move in 2020 signaling is the bottom. And now we're moving back up, and we've broken out to the upside of this pattern. Looking at the real estate to gold ratio, real estate is cheap. It has a long runway to run in terms of gold, but I do think that gold could potentially outperform real estate towards the back end when real estate crashes. What happens is real estate has a run. It remains, I would say, pretty well valued against gold. This is probably around 2008, 2007. It starts to lose towards the end of a bull market in the expansionary phase. Gold outperforms it. Real estate crashes, and gold usually peaks right after a crashing of real estate. That is where you want to swap your gold in 2011, 2012. This is the stocks to real estate ratio. All the money went into stocks versus real estate and or gold. So the money's over in stocks. That's all going to rotate when interest rates go up. This is going to be the largest rotation of money that I've ever seen for all this stuff. So it's ridiculous how much money's gone into stocks and bonds. All this money is going to rotate when interest rates go up. If interest rates don't go up, you're going to get this large real negative yield, and that real negative yield will eventually leak money over into commodities regardless, because they're going to be losing purchasing power on their bonds and stocks. I'm going to skip through this stuff right here. This is the S&P 500 index. This is stocks. You can see that it moves in cycles. There's another cycle back here. These consolidation periods are expansion phases of real estate from late 60s to early 80s, from early 2000s to late 2000s. These are, and in between is a recovery phase of real estate. Recovery phase of real estate, recovery phase of real estate, recovery phase of real estate. This is going to go sideways in one of these kind of motion patterns here in a consolidation pattern. That is what's coming up, in my opinion, with increasing interest rates. This is the commodity to S&P 500 ratio. We're still in market conditions here, decline. We are breaking to the upside of commodities outperforming stocks. We've got a nice, good looking chart here. This was done December 4th. We're going to pull on higher here. It's going to take probably a good 10-year bull market in commodities. It's going to be insane, guys. It's going to be insane. Zooming in on the right-hand side, this is the breaking of the channel. We're coming on back. This is our return move after breaking out, and then we're going to move on higher. Big bullish engulfing pattern on this ratio for the CRB to S&P 500 ratio. Gold to monetary base. Under certain market conditions, this revalues itself. Increasing interest rate with high inflation, it revalues itself like this. I think we're coming up to another revaluation period where gold's going to go up against the monetary base. High inflation is going to be the driver, with increasing interest rates chasing behind high inflation. If we don't get the interest rates to go up, I think they'll go up to some extent. Then they'll try to hold them down. But I think we'll still get the rotation of money into gold and other precious metals because of the high inflation rate. And I do not know how cryptos are going to do in this environment. They may follow what the NASDAQ does. It could crash 80, 90%, 70%. I don't know. Maybe they're inflation protected. Maybe they're not. I don't have the history on it. And I know people will ask questions about it. Here's the gold to oil ratio. This ratio is at 26 or 27. I think it came back just a little bit the past couple days. This is December 4th. We've been going up in this increasing channel. This is going to break the downside of this 20 and go all the way back down, probably back to these lows back here, or even further than that. This is going to get the squeezy done on this. It's going to be massive. Oil's going to outperform, and just be patient. You get in your oil investments, be patient. We are still at ridiculously low price ratios. The ratio was cheaper than it was in 2009 bottom at 27. That's cheap as heck. The valuation runway is still immense for oil. Looking at a pound of U3O8 in gold grams, this is going to go rocketing higher, I think, to the upside and potentially hit up here or even squeeze more than this. Why do I think it could squeeze even more? Because we don't have the energy. When we go into energy shortages, it's going to get squeezed. And we've got financial players here that are really looking to squeeze this to the moon. So I don't know how high it's going to go. We'll have to monitor it, but I think, in my opinion, it's going to get squeezed a lot higher. So positioning in uranium, I think, is a really smart move in a lot of these uranium producers. Here's platinum, another play that I think is really good. It's used in hydrogen. If we go and we try to build these battery electric vehicles, we run into mineral shortages. Hydrogen's next. Hydrogen, I think, is the only viable way to store energy from electricity. So you use electrolysis. Yes, it's not the most efficient way of storing electricity, but guess what? That's the only way that we have, that I know of, that you can store large quantities of electricity in. Batteries, I don't think it's going to be viable given how much minerals batteries consume. We've got the 1, 2, 3 pattern. 1, 2, 3, and then the break. We're pulling back on a return move. This is a little bit old. I think we're at 975 already, coming back up. So this thing is good to go. I'm buying the living heck out of physical metals. If we have an energy shortage and we have energy shortages impacting mining companies, the mining companies aren't going to benefit if they hit energy shortages. The physical metal holders are going to be the ones that are going to be killing it. Royalty companies could be impacted depending on the energy. Depends where they're positioned and how much energy those mining companies have in access. South Africa doesn't have a reliable electricity grid. These are 80% produced in South Africa. If we have a massive bull market in platinum where it goes to $15,000 or $20,000 an ounce, because South Africa has problems with electricity, and you're in all the South African producers, do you make money? Probably not. But guess what? I'm in the physical, guys, and guess what? The physical follows the physical price. That's what everybody wants. They don't want a company that can't produce. They want the physical metal. It's a low-risk way of playing it, so I'm playing the physical metals. Here is gold. Gold's going from a consolidation period, run up, consolidation period, run up, and we're in a little consolidation period, and we're going to run up to the upside, I think. Gold is also at peak gold. We are producing from a supply aspect, peak gold anytime now. It's this, this year in 2021, 2022, that is projected to be peak supply of gold. If gold's going down and our demand for gold is rocketing higher, that seems like a perfect situation. The same thing's happening in platinum. We hit peak platinum production of supply in 2006. We are looking at massive supply constraints in platinum. We can't increase production with these old mines. They're all exhausted. Huge opportunity coming to buy physical metals here. Here's the price of West Texas Intermediate crude. This is oil. Oil's got a massive pattern that's developed. We've come back into the pattern just here recently. We're coming back up, trying to break the 75-ish level. Then we're off to the moon. We break out of this pattern, we're off to the moon. You want to be in it when it's going to the moon, or do you want to be outside of it wishing that you bought? I don't know. That's up to you. Here's copper futures. Copper's broke its pattern to the upside. Commodities are already breaking to the upside. We saw the CRB index break to the upside. Oil's doing a little bit of laggard, a little bit of a laggard here. But copper's already moving. This thing's is a consolidation pattern to move on up. Copper is going to go vertical, guys. We don't have the copper. If they're going to try to do these renewables, it uses so much. It's ridiculous how much copper it uses in the power transmission lines for a lot of these wind turbines. We're talking about hundreds of thousands, millions of pounds of copper. We don't have the copper worldwide to flow it at the rates that they want to use it at. Copper price is the only thing that's going to stand between the demand and supply. And I'm in the royalty companies, Nova Royalty, NOVRF. That's what I'm going. I'm going to skip past that one. Here's the 10-year Treasury rate. It's declining in a 40-year bear market for rates. We're coming up. I think this is going to break and go into a bull market and we'll be at low levels like the 1940s. Now, this is the 1940s, but you've got a twist here because the 1970s, at the beginning of the 1970s, we had an energy crisis. That was 1970 of oil peaking. We have an energy crisis now. So I don't know how this is going to look. We could see interest rates go drastically higher very quickly with bondholders. When they catch a whiff of this, they're probably going to dump bonds. And then I don't know how the government and Federal Reserve, I don't know how they're going to handle that. Because you're just going to get bonds all over the world being dumped in mass. I don't know how they're going to handle this. Energy prices are going higher no matter what. They're not going to be able to hold it down. They can do all the variant scares. They can do C-19. They can try to slow it down by travel restrictions and all this other stuff. I don't know how they're going to stop it. That's the only way they're going to try to stop it, is to stop movement. 2018, it was rocketing higher here. It was already breaking out. We were already hitting shortages of oil in 2018. It was getting tight, I should say. And then somehow C-19 came about. I don't know how that came about. I'll just say that. But they're using it to stop travel. They're putting people in lockdowns. They're putting out. I don't know if the variants. I have no idea, guys. It just so happened that they had the C-19, but it's coming. The oil crisis is coming. Energy crisis is coming. I'm going to skip over these cost producers here. We've got the M2 money supply. This is inflation. It's lagged behind. Inflation is lagged behind the M2 money supply. The black line's M2. The red line is inflation. We're coming on up. We've got a break here of 10%. That's kind of where we had resistance. It broke through that. We're coming up back below or above the 10% line. This rollover doesn't mean that we roll into negative territory. What this means is that it will remain elevated for a very long time because they're still printing money at rates over 10%. That's probably 13%, and this is 20-something percent, and this is just starting to account for it. This is probably going to roll all the way up somewhere in this range. It depends what they admit to, because they just hedonically adjust and substitute their inflation numbers. So it all depends on what they do over here and how they account for it. Here's Reconnaissance Energy Africa. This is going into some of the companies. This is an exploration company, probably one of the last big onshore finds of oil. This thing's been rocketing higher. We've got a nice, good, bullish engulfing pattern right here at the end. I own this thing. It is an exploration company. It does carry far more risk. The short sellers, since this thing rolled over a bunch of short sellers, they're trying to sue the company, saying that they released information that's not accurate, which I think they have released information that's accurate. They're just salty because they are on the wrong side of this move. And you know what? I'm going to tell you this. There's going to be more lawsuits in the future if these guys are still in this stock because they're going to get squeezed to living heck. And this thing's going to go rocketing higher again, probably. We'll see. Here's SM Energy. What's this is called is a reverse head and shoulders, inverted head and shoulders. I'm going to tell you the setup. We had a 1, 2, 3 setup. We were going to break to the upside. COVID or the C19, the medical event that we should not talk about, which I just did, brought this thing lower. It bounced. This was a buying opportunity of a lifetime down here. Coming on up, and we're just coming back to where the breakout point of the neckline is in 2018, 2019. We're going to break this and we're going to move far, far higher. This is going to be a massive move. And this move here, it's going to be big. It's a great setup. It's a reliable setup. Another one, Centennial Resource Development, inverted head and shoulders. There's your inverted head and shoulders. The neckline, we're breaking to the upside already. They tried doing some news to slow down the move of oil, but it's going to, structurally, it has to go higher. This thing's going to be rocketing higher. I could easily see this far above $26 a share. It could be $50 to $100, depending on what the price of oil does. I think it could go. The price of oil could go ridiculous in a squeeze scenario, but we'll see. Here's Callon Petroleum, another inverted head and shoulder, ready to break its neckline. Very high price target of over 110 for this move here, and it's probably going to far exceed that because oil's not going to stop, in my opinion. Here's Northern Oil and Gas, big old pattern. Projected move is up, I don't know, $300 something. It's coming on up. This one's a very good one as well. Yeah, some of these might have some short-term resistance, but in the long term, these things are fantastic for long-term investments. Here's Crescent Point Energy. Again, guys, reverse inverted head and shoulders. It's breaking out of that neckline already. So some of them are already breaking out, like Centennial Development and Crescent Point. There's no reason to think that not all of them are going to break out of this. They're all just starting to break. Big old price target up here, and this is probably going to come back and probably even exceed the $50 highs. I think we still have 10 baggers in these things. Here's Comstock Resources. This thing is just breaking out of its pattern. It's kind of a laggard. It's coming on back. Another one to look at, in my opinion, right here is CRK. We've got Southern Copper. We're looking at different areas now. This is copper coming on up. We're broke out of its pattern to the upside. We're doing a retest move. This thing's going to launch higher. Copper is going to be short. This is a mining company, high dividend paying mining company. But I just wanted to show you the pattern. Looks good to move on up. Bannerman Energy, a uranium company. I'm touching everything here. Coming. We've got downtrend momentum, squared up, sideways momentum, and now we're moving on up. Look at the volume. The volume is massive. It's accumulating this like no other. This thing's got a long way to move on up. Way higher. This looks fantastic from a long-term perspective. Here's First Majestic Silver. First Majestic Silver's got the 1, 2, 3 pattern. It usually breaks on up. This was the Wall Street squeeze on silver. Someone basically tackled it down back into the pattern. We were putting in a descending wedge pattern, broke that to the upside. We are just waiting for this to move on up and revalue itself. Do I think a long-term move in silver and gold are going to manifest itself in a long-term uptrend? Yes, they will. It's going to be a big move to the upside, in my opinion. We've got Newmont Corporation. This is the largest pattern I've ever seen in anyone's life. This is from 1978. We started in 78. The 70s bull market is the lead-in for this pattern, guys. This pattern is ridiculous. It is ridiculous. Because what this is saying is that we went from a 1980 timeframe. This is a 40-year decline in interest rates during this timeframe, guys. This is 87's peak all the way over to 2020. This pattern is signaling that we are squeezing this thing up, and when this thing breaks, this is the biggest launching pattern I've ever seen in any stock. I think Hecla Mining's another one that has a huge basing pattern. These things are going to rocket so high, it's going to be ridiculous. And I do have a good exposure to gold and silver mining assets like royalty companies, and so I do have some mutual funds as well. Wheaton Precious Metals, a royalty company. Big old pattern here from the last bull market of 2008 to 2011. It peaked. We're squeezing on up, and we're consolidating in this period, and we're about to break to the upside. This is when you get loaded and you stay in these stocks. You don't have to jack around here. You just hold on to them. You take positions, you hold on for the long term, and they will appreciate dramatically. Here's I put lumber in here. I'm just showing you that lumber. They use this as an excuse. They said lumber is increasing. It's a leading indicator, and then they said, "Oh, it's crashing," and nobody else talked about it. Well, now it's coming back with vengeance. It's rocketing higher. Lumber is. The economy is still strong. We still have inflation. Nothing's changed. We're still in an expansionary phase of real estate. We had a supply chain disruption by shutting down that COVID. We're gonna continue higher here, guys. We're going on up. We're gonna continue higher. Everything looks fantastic. Those are some of the companies. Just looking at them, I just took random ones. I'll go over some of the companies in another clip, but everything's aligned. I don't see any of these long-term chart patterns. None of them look bearish to me. And I just went over a whole array of different companies: copper companies, silver companies, gold companies, oil companies, uranium companies, all these commodities, the CRB index to stock ratio, the real estate to stock ratio. All of this stuff is incredibly cheap. That's inflationary. The money's going to rotate from stocks and bonds into the commodity and precious metal arena. This is going to be ridiculous. These patterns are forming for a reason. It is millions of transactions of people like myself, yourself, and everyone else in the markets, very highly educated people in the markets with lots and lots, running lots of money. They're all positioning in these things, and we can see it in the patterns. These patterns are big basing patterns that are going to all break to the upside eventually. We are early to this game, and this is when you need to be here. You got to be early. That's when the money's made. You don't want to come in strolling into cryptos, buying cryptos at the top stages. And that's where I think we are. You don't want to be buying NASDAQ right now. You don't want to be buying stocks where they're at their all-time highs. Could they squeeze out another 100% gain? They could. They very well could. But here, these things have massive upside potential. Absolutely massive. We're forming the big basing patterns. Lots of them have broken to the upside, and we're coming back and doing retest moves on some of them. That's when you buy. That's the lowest risk, highest reward entry points for technical analysis. You break you break the pattern, and then you do the retest. That's like the perfect spot to be buying. And all of these have done that. A lot of them. Some of them are still in their patterns, but all the other ones are breaking to the upside in their own sectors, the same sector. I have no reason to believe that they wouldn't break to the upside. So huge opportunities here, huge opportunities on the channel. I go over all this stuff. If you guys like this type of analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. Maybe I'll go over some more companies. Watch my Thesis 1.0 and 2.0 below in the description. That'll lay out the market conditions and how I think this is all going to play out. So look at those, watch those videos. This is insane. I haven't seen these setups. Haven't seen them for my life. Setups this large. They don't come often. So you're going to have to binge watch the videos, get up to speed if you haven't watched them. This is the time to be educated and informed. Get on the channel, subscribe to the channel, and let's ride this thing to get up together. Thanks for listening. This is Finding Value.